Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All kinds of movement on the market. I was going through and reading all the different articles, everybody giving their opinion on what could be causing it. And there was one thing that I did not hear people talk about. In my opinion, I think the market is actually paying attention to whether or not Trump is found guilty of his court case. Because if he's innocent, that means there's no more court cases. I think that would bring a lot of confidence to the economy. Anyways, let's get into this. Before we get started, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, head on over to our friends at Miles Franklin. The link will be down below in the description. When you make your purchase, make sure you use promo code Pimpy, P-I-M-P-Y, and they'll take care of you. If you have any additional questions, you can reach us over here at this phone number or over here at this particular email. For all orders over $10,000, reach out by email and we'll make sure that you get a great deal. So come on over to Miles Franklin and add to your precious metal inventory. Another thing that Trump has going for him, he has let the crypto people know that he is pro-crypto, and you can see right here, Elizabeth Warren is anti-crypto. Not only that, he said it's necessary for us to go to a digital currency, but he does not support the central bank digital currency at all. Bitcoin at $67,568.35. Ethereum's at $3,780.55. Solana is at $169.34. XRP starting to become a stable 50-cent piece. Still at 52 cents. Dogecoin is at 16 cents. Shiba is at 4028. Polkadot's at $7.18. Litecoin is at $83.80. Is that Polygon? Polygon's sitting here at 71 cents. Terra Luna is at 30114. Satachain is on a run. It's up 13% for the day. It's at 201269. Gold is at $2,336.80 per ounce. Silver started to take off again, was pulled back just a little, but stayed above $32. Silver's at $32.19 per ounce. So the stock market today, Dow leads stock market slide as rising treasury yields rattle nerves. But I do think Trump's court case has something to do with it as well. People are really watching it closely. I don't know if people would have the same faith in the market as they would under Trump administration. It says U.S. stocks weighted in red on Wednesday after a spike in treasury yields. Unsettled investors already weighing whether recent data will shift the needle on the interest rates. The benchmark S&P 500 fell more than 0.7%, while the Dow Jones Industrial Average drifted about 1% lower, shedding over 400 points and leading the indexes down. The NASDAQ Composite declined about 0.6. Stocks are sliding as investors contemplate a jump in U.S. bond yields after a government debt auction flopped, reflecting worries that the Federal Reserve will keep rates higher for longer. And that's more of a reason for you to be buying gold and silver. The yield on 5-year Treasury rose to near 4-week highs this week. The 10-year yield is back above the key 4.5 level, trading around 4.62% Wednesday, its highest since early May. Those concerns appear to be eclipsing the hopes of AI growth that lifted the NASDAQ to a record in the slipstream of Nvidia's post-earnings rally. Nvidia stock rose for a 4th straight day on Wednesday to close at a record high. Oh yeah, I should do my little portfolio thing and see how I'm doing. Investors are also trying to puzzle out what Tuesday's stronger than expected consumer confidence print means for federal policymakers, but they are braced for a long wait for a pivot to rate cuts after a litany of warnings from its officials. So we've seen gold and silver. Gold has reached record highs. Silver has popped up above $30 an ounce. But there's more of a reason for you to be buying into it. As you can see right here, Chris from Arcadia Economics had Andy aboard. There's a report out on a newly partial gold-backed BRICS settlement currency. They're being persistent. But it's not just that. There's a lot of manipulation that Andy's going to go over and then let you know about how little of inventory is left. Let's get into this.
I don't know, man. It just seems that things are starting to get really, really, really interesting in the metals market. And I would argue that the the long-standing, decades-long-standing ability of the Western commercial banks to manage the price, I think it's ending. And the real flow of metal from west to east is happening. And what I find craziest about all of this is that there are very few people. You're one of them. Vince is one of them. I'm one of them. There aren't a lot of people who are talking about this, and the underestimation of the significance of this is insane to me. But it's happening in real time, and I think it's going to start to get really nuts here pretty quick with the shortages of supply and these naked short positions. And I want to talk about our old friend Jeffrey Curry for a moment. I don't know if you saw the article that he came out with. I'm sure you probably did, as you see everything silver. But it's worth talking about because remember, Jeffrey is the guy when he was at Goldman Sachs that famously said that the ETFs are the shorts, that the ETFs short the metal into the market to hedge the position. That was a faux pas of ridiculous proportions because when you're holding someone's silver as a custodian, you're not hedging squat. They're risking the whole thing is a risk. They're hoping it goes higher. I hedge my position because I buy inventory to sell to people. I can't let it crash or I go out of business. But when you're a custodian and people are signing up to buy the metal that you hold for them, you're not hedging it. What you're doing is selling it into the market to create excess supply to manage the price. Well, he just came out and echoed a lot of the things that we've all been talking about for a long time. Did you see that article by chance?
See, this is what we're talking about, how they use the paper gold and silver to manipulate the markets. And that's why when you see people like Goldman Sachs, JP Morgan, BlackRock, and them all trying to start ETFs for cryptocurrencies, I kept telling you guys, that's not a good thing. That's not good at all.
I did. And I'm looking for it in the background here.
Well, he says the key difference between the current commodities rally and those of the past has to do with the changing nature of the petrodollars. Where have we heard that before? With major commodity producers no longer automatically recycling their dollar-denominated oil revenues back into U.S. treasuries. Where have we heard that before? He says it explains a lot why gold prices, and I would add silver, are as strong as they are. And what is the evidence of that is the emerging markets, the BRIC countries, all met with Saudi Arabia and other key participants in November of last year.
I'm going to back up just a little bit. And I spoke to a couple of people in a group about copper. I said, well, I mentioned copper once before. I don't usually follow up on it. I know, I should, because people should hear. You can see right here in this article, it says the red hot copper rally has propelled prices close to an all-time high at $5.10 per pound. Copper investors are enjoying another banner year with the Global X Copper Miners ETF is up 36.7% in the year to date. So yes, copper is definitely on the move still.
Silver are as strong as they are. And what is the evidence of that is the emerging markets, the BRIC countries, all met with Saudi Arabia and other key participants in November of last year and discussed how they're going to trade with one another using local currencies. And then whatever it nets out in settling, they would settle in gold. Where have we heard that before? And he notes that both China and India are paying for oil in local currencies and others. And he thinks that Russian sanctions on Forex reserves mean we're unlikely to see a U.S. commodity deficit recycling playing out probably ever again. Where have we heard that before? We've been talking about this shit for 2 years on your site. And now Jeffrey Curry, who's, say what you want about him, working at the Carlyle Group and former head of commodity research at Goldman Sachs, he's at the head of the table. He knows everyone. And I think the takeaway was the last paragraph of the article where it says Curry's confirmation of gold recycling. And again, and I would say it's not just gold, right? Gold is replacing the treasury bond for sure. But I would add silver, I would add oil, I would add base metals, I would add, all of these commodities that are integral. But gold is the key one. And a lot of us have a bad habit of saying gold and meaning everything, gold, silver, platinum. But anyways, he says Curry's confirmation of gold recycling of commodity surpluses means the de facto net settlement is gold. Let's not forget that the oil markets alone are roughly 12 to 15 times the size of the global gold market. So if indeed all of these countries are selling their goods for local currencies with one another, which they are, and we've seen a lot of evidence of that, and then netting out the excess in gold, in silver, in oil, in rare earths, in copper, in whatever the hell that it is destroying little by little the value of the dollar, both its settlement and reserve status. I hope this makes sense for people. But look, you got the M2 money supply up 14 times since 1980 and still silver at 60% of its high. Doesn't make sense unless it's been managed. And there was an article or a interview that I saw on Palisades Radio, a guy named David Jensen. It was fabulous. It was really, really good. And I want to give the guy credit because he inspired me to do some digging. But what he was talking about was that the LBMA trades 292 million ounces of silver per day and 20 million ounces of gold per day, right? You contrast that to the Shanghai Metals Exchange, where you have to deposit a bar first to trade it. They only trade 300,000 ounces a day, yet LBMA is trading 20 million. And he goes on to say that there was a survey done at the bullion banks in 2011, which said the real number is 10 times that. Because if you sell 20 contracts and buy 10, the LBMA only publishes the net, which is 10. It was actually 30 that you traded. So if we take that to be gospel, that there's 10 times the amount that they're telling us is probably more, that would mean that they're trading 200 million ounces of gold per day. And that would mean that they're trading 2.9 billion ounces of silver per day on the LBMA, which in other words, they're trading over 3.5 times global mine production per day on the LBMA. This is how you suppress the price, by overwhelming the system with paper contracts. And you know what's the COMEX? 1700% rehypothecated, overwhelm the system. But when you realize that the LBMA silver trading is only 3% of the gold trading in terms of dollar value, it's a tiny market, and you overwhelm it with paper, you can control the market until you get countries like India who accumulate 600 million ounces and China voraciously accumulating it. They understand what you've been saying forever. No one was listening. I did, but most didn't, and now they will. And you will go down, as someone who saw it way early, that silver is the linchpin. And I didn't even really understand it back then. It is the linchpin of this whole system breaking apart, because it'll blow up the bullion banks, which will blow up the system. The bullion banks are the big commercial banks. It'll blow up the whole system. The lack of trust will have been shown to be of epidemic proportions. No one will ever trust us again. They won't trust the West. And I think that's exactly what is happening. This is why the banks are showing up in Shanghai begging for silver. If you can't export gold, you can only export silver. And we see massive deficits in both the COMEX and the LBMA in terms of stockpiles. Where are they going to get it to cover these short positions?
Yeah, that's a good question, Andy. Where are they going to get their silver from? There's not enough. That means the price of silver is going to skyrocket.
And I think that's what you see happening. So I don't know, man. I think it's getting really crazy, Chris. I really do. And Jeffrey kind of illuminated it by, saying, look, these countries have chosen to move away from the treasury and move to commodities. They're the ones who are buying the contracts that the stupid banks are naked shorting by creating these contracts. Well, now they want delivery. What's going to happen? Maybe they went there and begged them not to take delivery. Why did Janet Yellen go to Brazil, begging them to buy treasuries? Why is Jamie Dimon in China right now? Is he begging? Don't blow up the silver market. Let's work out a deal. I don't know, but I think when you see arbitrage of $4 plus, it tells you that they're not making it easy, and I don't expect them to, and they're not doing this out of benevolence. There is a quid pro quo going on, and the bullion banks have to offer up something. And at some point, there'll be nothing left to offer up in a world where commodities rule and paper currencies don't. Right now, we're transitioning there. The dollar still has a great deal of value globally. But what happens when it doesn't? What happens when, no, we don't want it? Because, the old saying, he who has the gold, I would say he who has the gold, the silver, the platinum, the palladium, the uranium, the rare earth metals, and the food, and the copper, they make the rules. And I think that's the transition that we see ourselves heading into.
Give a shout out to Chris Marcus for that video over there at Arcadia Economics. I will leave a link for you guys to go check them out. Also, with what Andy is saying, the writing has been on the wall for a long time. We've been speaking about it here for a long time. A lot of you have been stacking since way back in 1952. And I'm only kidding. Way back in, 2019 when I first started speaking about this? You had all this time to start adding to your collection. I encourage you to continue. Just keep doing it as long as possible. We told you they can only manipulate this market for so long. We're surprised it's made it even this far. And you can see that gold prices and silver prices are starting to slip out of their control. Every time they beat it down a couple bucks, they rebound quickly, as they should. So if you haven't started and you're ready to start buying gold and silver, go over and check out our good friends over there at Miles Franklin. Their phone number is 844-874-6797. Tell them Pimpy sent you. Yeah, give them a call. Ask questions. Don't be shy. That's what they're there for. Again, that's Miles Franklin at 844-874-6797. Anyways, you guys leave a comment down below, and I will get back at you later. I'm out.